3, 2, 1, 0, and liftoff. Liftoff. Americans return to space as Discovery clears the tower.
Welcome back to TTMTrades. Today we're going to be talking about my top 3 for the week, and these are very volatile, fast moving plays. Okay, so I'm gonna forewarn anybody who's a new trader and is still learning to trade. I highly suggest you do not try to play these picks I'm about to put out unless you are an experienced trader. Okay, so 2 of them are exchange traded funds. One of them is a volatility index and the other one is a regular stock. So top 3 for the week plus 1 is ETF JDST and UGAZ, and one from the volatility index is the VIX, and then our stock that we're playing is CPHI. All right. So let's jump right into it. Let's talk about the stock first. All right, so CPHI, I actually did this in one of my TTMTrades daily reviews, I believe last week on Thursday. As you can see, it had this nice gap up from 17 cents to $1.45, and it's been on a downtrend. Now, for one, it found support on the 50-period moving average right here, the yellow line coming across, and it's been holding above it nice, all right, with a good volume below to show some accumulation. Also, the Bollinger Bands are beginning to constrict, which means that the volatility is very low. The price isn't swinging wild anymore, and the Bollinger Bands are constricted in this general area. So normally it's the calm before the storm, which means normally if there's volatility right around the corner, if there's low volatility, then normally right around the corner there's a nice breakout. Now, how do we know which direction this stock is going to break out? We don't know if it's going to break to the downside, and we don't know if it's going to break to the upside. From my observation, okay, our RSI, remember what I told you about our RSI, as long as a stock is maintaining a bullish state and it looks like it wants to continue to bounce up or stay in the uptrend, it will find support, number one, in that 40 to 50 range on the RSI. So as you see here, the stock came down and dipped back below, but as it came up, you had these nice little swings down at the bottom from 15 to 24 cents. And as it came back down, it found support in that 40 to 50 zone like we talked about with the RSI, which means it still has the potential to bounce. The RSI is still in a bullish state. Had a nice little bounce, came back down, dipped, but it stayed right in that 40 to 50 zone. You had this nice breakout. As you can see, the bands were constricting down here, signaling low volatility. And now we've been on this downtrend. All right, everyone knows I keep a simple 10-period moving average and a weighted 30-period moving average on my RSI. Anytime the RSI crosses below that 10-period moving average, then that's a signal to me that the bears are taking back control. And anytime they stay below the 10-period moving average, I do not touch it, because that means the bears have full control. The RSI measures momentum. So if we see that the momentum is staying below its 10-day average right here, this yellow line, then that tells me the bulls aren't in control. So if you see we stay below this entire time, which reflects in the price action continuously dropping, bears having full control, hit the 50-period moving average, had some nice accumulation with a nice bounce. All right, same thing here. As you can see, the RSI was coming down. That last line of support right at 40 before it switches to a bearish state, it hit it, flatline, and then had a nice bounce off of it. So we're still in a bullish area. Plus, at the same time, we crossed back above our 10-period moving average, and we're holding between that right now and the 30-period moving average. So a very bullish signal would be a breakout above the 30, which will also be a breakout down here on your Bollinger Bands, and then you would continue heading up to retest these profit areas of, as you can see, this last support area of 42 to 43 cents, and then right where it topped out at is 62 to 65 cents. So this could be a good swing play going into next week. Now, mind you, that 50-period moving average is holding well, which is currently at 30. So if this begins to break below 31 and then it goes below 30 on high volume, then I will cut my losses, because the 50-period moving average is no longer holding this stock up. Also, if we go out to the weekly on CPHI, just like I showed you, on the daily, even on the weekly, when you had this nice breakout as it begins to trend down, guess where it found support at? On the 30-period moving average, the green line, and also close to the 50 area on the RSI, and you had this nice bounce off, all right, which signals this right here. So this could be a good swing going into next week. Play your entries and exit safe. All right, next we're going to be talking about JDST. All right, so what is an exchange traded fund? Because JDST and UGAZ are exchange traded funds. So pretty much ETFs. I pulled up the definition so you can see it right here. All right, so an exchange traded fund is an investment fund traded on stock exchanges, much like stocks. An ETF holds assets such as stocks, commodities, or bonds, and generally operates with an arbitrage mechanism designed to keep it trading close to its net asset value, although deviations can occasionally occur. So what does that mean? All right, so gold, there's two ETFs. Well, there's one ETF that tracks gold. As you can see, this is gold right here, which is trading right now real time. Okay, JNUG is the exchange traded fund that follows gold. Now, what is JDST? JDST is also an exchange traded fund, but it's an inverse fund, which means it does the total opposite of what JNUG does. Now, some of my fellow traders in my private Discord chat has seen me talk about seesawing these two ETFs. What I mean by that is they're a direct reverse mirror image of each other. So if you look at JNUG, has this downtrend with a nice spike up and tops out. If you look at JDST, has this nice uptrend with a drop, bottoms out, pops up. JNUG tops out, pops down. They are a direct mirror image of one another. Okay, they do the exact opposite of what each other does. All right, so with that being said, if we know JNUG follows the price action of gold, and we're looking at the overall trend of gold, as you can see, gold is forming a ascending triangle pattern. If you look at this long term, it's this key resistance area right where you see this red line right here. Can't close above this area or hold above it. It runs down, comes back up into this area again, reject it. It runs down, comes up into this area again, reject it, comes back down, runs into this area again. And now that we're in that area, guess what's about to happen? We're about to get rejected again. Now, if we know that we're hitting a high resistance area for the overall price action of gold, which is this red line coming straight across right at 1341, and we've been unable to break through this area, then it is safe to say that gold is pretty much topped out at this area and it's going to pull back. Now, if we know gold is going to pull back, then we know since JNUG follows gold and JNUG is on this little spike up right here, it's safe to say that JNUG is going to pull back at the same time and bottom back out at this 12 support where it's been holding pretty nicely. Now, if JNUG is about to drop back down to the support level due to gold hitting a major resistance area up here, then it's safe to say since JDST is the inverse of JNUG, then since JNUG is about to reverse and go back down and hit this $12 support area, then it's safe to say that JDST, which is a reverse mirror image, is going to bounce back up and run up into these resistance areas right here at $67 and $75, which is a nice profit for the week. All right, so I would wait to see. And then also with with JDST, we had this run up on the RSI, hit that oversold, and it came back down into where that 40 to 50 area I tell you about on the RSI, and it immediately found support in that area, and now it's trending back up, which is a very bullish move as far as the RSI goes. And at the same time, nice volume behind that accumulation. Gold is at a very strong resistance area where it's about to pull back, which means JDST, which is the inverse, is going to do the opposite and run up. All right, so JDST is a play for this week. I hope I did not confuse anybody who does not understand ETFs. Now, next is UGAZ, UGAZ. This is another ETF which tracks natural gas. Now, The overall natural gas index is right here, the S&P GSCI natural gas index. This is the major index. Now, if you look at the natural gas index, it is at a major support area. If you look, go all the way back to 2017, early 16, this line of support, if you can see going straight across, has held 1, 2, run up, 3, run up, 4, 5, 6. So if we know the overall natural gas index is at a strong line of support, then it is safe to say that it is going to accumulate here right in this general area, and then it is going to bounce off that line of support and run back up. Now, if we know that the natural gas index is about to run back up because it is as a major line of support, then it is safe to say that UGAZ, which tracks the major natural gas index, which is velocity shares 3 times long natural gas, is going to where it's currently double bottomed at, another strong line of support, and then you can see it's 1, 2, 3, 4, 5 days of straight accumulation right at this bottom area. And your RSI is right, it's not oversold, but it's right at the 30, and it's holding perfectly well to make a reversal and head back up. So if we know that the overall index of natural gas is at a strong line of support looking straight across and is due for a bounce, and we know that ETF UGAZ follows the natural gas index, then it is safe to say that this area is being accumulated and will follow the index and also have a bounce. So right now it's currently at $50 to $52, and if we have that natural bounce and move back up into these areas of $80 and $103. Now this index moves, the things about ETFs is they move fast. All right, so this is why I don't recommend new traders try to play these unless you know exactly what you're doing. But as you can see, there are a lot of gap ups, a gap up here, a gap up here, a gap up here, gap down, so on and so forth. In order to trade these type of ETFs, you have to know what the big indexes are doing, such as the natural gas index, such as what gold is doing. All right, but just to get back into UGAZ, so it's accumulating at this bottom. Like I said, we know natural gas is at a major line of support as far as the index. This should run back up, so this is a good area to buy in at. And at the same time, DGAZ, which does the inverse, is currently topping out. So as UGAZ runs up, this is going to run down. Now, what do I mean by seesaw? Once UGAZ runs back up into these areas of resistance, same thing with the natural gas index, as it runs back up into these areas of resistance and look like it's going to reverse, then you could jump out of UGAZ and jump into DGAZ and ride that wave back up. All right, so those are my 2 ETFs. Now we're going to talk about the VIX, okay, the volatility index. All right, this is my extra one, and this moves fast. All right, so the VIX is not an ETF. Pretty much it's a volatility index. What do I mean by that? So when your major indexes like the S&P 500, the NASDAQ, the New York Stock Exchange, anytime they're moving up very calm and a nice slow pace, then as far as option traders, the volatility index stays at a nice slow pace. I got hiccups, I'm sorry. At a nice steady pace. All right, it doesn't spike up or do anything crazy. Now anytime one of your major indexes begin to drop, which causes mass selling, as what we're kind of seeing right now, then this causes fear and greed. All right, these general areas right here. All right, even if we look 2016, early 2016 to March, this big drop right here, if you look at the VIX index, early 2016 to March, it ran all the way up. All right, so they call the VIX indexes, they call them the fear and greed index. Okay, so pretty much anytime your major indexes aren't moving at a nice steady pace and they begin to drop, what happens is your volatility indexes begin to spike up. All right, so what we have here is one of our major indexes, the S&P 500, was on a nice tangent moving up, and then it had this major drop, as you noticed the past 2 weeks in February. So during these past 2 weeks, as it had this drop, then the volatility index, which was nice and calm because the major indexes was nice and calm, past 2 weeks shot up real fast. All right, and this shows this is supposed to replicate the fear in the stock market. Okay, a lot of people call this the fear index. Anytime this spikes up like this, then they say it's a lot of fear in the markets. All right, and the reason it's a lot of fear in the markets is because they're crashing real fast. Even in 2008, I don't know if the VIX goes that far back, but let's look at another time this thing has crashed. Even here, let's look at this dip. So this dip right here from September 2014 to give or take November. If you go back and look at the index, the VIX index, what we say, September 2014? September 2014 to, like we said right here, October, November, you can see the spike up. All right, so anytime your major indexes aren't continuously growing and moving at a steady pace, anytime they have dips or they look like they're selling off or the stock market's about to crash, then all of your VIX indexes, your TVIX, your VIX, all of these IX volatility indexes you see will shoot up. All right, now that's just explaining it. Why do I think this is a play this week? Me, honestly, I do not think the S&P or any of the major indexes such as the NASDAQ, anything like that, are about to fully recover. They had this run right here. This run was ridiculous how fast it shot up like that. Even on these runs, I mean, they're steady pace. They're climbing nice and slow. See how they're climbing nice and slow? In the month of January 2018, this index literally took off running. All the major indexes took off running, setting record highs. Now, when something like that happens, the stock market needs to cool down and it needs to correct itself. So that's what we see right now, a nice correction. And it's trying to come back up and meet these highs of where it was at, but I don't think it's going to reach them. So what I think is happening right now, the S&P 500, NASDAQ, all of them, they're all trying to make a bounce play to come back up, but I don't think overall investors believe in this bounce play. So I think it's going to top out right in this general area and begin to fall again. Now, when it begins to fall again, that's going to cause fear in the overall market, which will cause all of your volatility indexes to begin shooting up again. Remember, they call this the fear index. So if there's fear in the market, this takes off. Now, like I said, what I see, I don't think the S&P 500 or any major indexes are going to recover anytime soon, and this is going to drop back down. So when this begins to drop back down, your VIX index will begin to shoot back up to show the fear that's in the market. And just for technical analysis, as we can see here, it's found support on the 30 EMA on this chart, and then at the same time, your RSI has come down into that bounce area of that 40 to 50. Remember, I told you anytime a stock is in a bullish, still in a bullish trend, it will find support on the RSI in that 40 to 50 area. So as you can see, it came down and hit that 50, and then it just flatlined right here, which means the RSI is finding support, and then you're also finding support on your weighted 30 period moving average. So I do not think the S&P or any major index is going to recover right now. I think they're all going to drop back down again and bottom out to find support. And when that happens, all of your VIXs, TVIXs, any volatility index you've been watching will all spike back up to these highs again. All right, so hopefully I didn't talk your head off. I had to do a lot of explaining because I know people don't understand ETFs and the volatility index. But TTMTrades, those are my top 3 for the week, plus 1. If you learned anything, hopefully you learned something. Subscribe to the channel and leave a comment below.
Houston, Tranquility Base here. The Eagle has landed.